Abby Massey.
Hi.
Thanks for doing this.
Of course, I'm glad to.
I was going to ask you what cost segregation is.
Okay.
But I have a 3-year-old daughter at home, and
Yes.
she's brilliant. Shameless plug for my daughter.
Yeah.
She's already reading books. And
that's great.
yeah, I'm so proud of her.
Oh.
But she loves watching these videos. I'm sure she'll watch this video.
Yeah.
And I would love it if you just looked at this camera and explained to her in terms that she might understand what cost segregation is.
Sure, you want me to look right in the camera?
Yeah,
Okay.
like you're talking to her.
So cost segregation is a strategy where you take a building and you put it on your taxes. So if a building has a value, let's say it's worth $1 million, every single year, the government pays you back a little chunk of that building. So they give you a little bit of value because you've used it, right? And so when you use your house, it loses a little bit of value. And so you get a little bit of money for that every single year until eventually your house has no more value in it, right? You've used it for so long. Now you've essentially depreciated or dwindled down its value, right? It's just an old home at that point. What cost segregation allows you to do is, instead of allowing the government to give you just a little bit of value every single year for a bunch of years, you can now actually say, well, wait a second, my house is made up of a lot of different things. It's made up of the structure. It's made up of the plants outside, the driveway, the lights inside, the furniture, and all of those things lose value, right? They get worn down at different speeds. And so instead of saying everything takes a very long time like a house, some things get worn down quickly. So they will give you more money quicker for that. And so that's what cost segregation allows us to do, really break up that home into multiple segments where we get to see how much value we can bring forward quicker so that you can essentially devalue your stuff at the right speeds.
She's going to love that explanation.
Okay, good. I don't know. I was like, it's kind of a concept that's a little bit tricky because it's taxes, which most 3-year-olds don't understand.
I don't think we've talked about taxes yet, but that's okay. She'll be there soon.
Yeah. We can do another video for taxes. Yeah.
So let's see. How has cost segregation been affected by any changes in 2026? Is there anything new to that field?
Yes. The real changes that occurred were from the One Big Beautiful Bill that was passed in 2024. So 2025 is the first year that's really you're able to benefit from the impact. The good news is that the changes were really positive. So essentially what's happened is they have now made bonus depreciation permanent. Are you familiar with what bonus depreciation is?
Mm-hmm. Yeah.
Okay. Yeah. So bonus depreciation, when you recategorize that asset into 5-year or 15-year, which is personal property versus real, now it's eligible for 100% bonus depreciation, which means you get a whole lot more from doing a cost seg in that first year that you do it. So really accelerating that depreciation forward that you can then put back in your pocket as tax savings and utilize however you like.
What does the cost segregation process look like?
Yeah, so to do a cost segregation study, it's actually quite simple. The first thing that we do at Capsan is we request information for an estimate. So we always want to put an estimate together based off of some details about the building. So was it acquired? Is it a new construction? Maybe it's a renovation to an existing property. From there, once you get the estimate together, you get an idea of what the benefit could be. Then we would collect some documentation about the building. So if it's an acquisition, we might get the closing statement. If it was a renovation, we might want the construction drawings or the budget breakout. Then the engineering team, that's when they do their magic. They'll go on site. They'll document the building and the components of the building. Sometimes they can even conduct that visit virtually. Either way, they're really just trying to confirm what all is in there and what's the grade and quality of the materials in there. And then they'll go back and they will do the segregation part of the study. And so they'll go through the costs. They'll figure out, okay, based off of the tax code, what items can be considered personal property, land improvement, or what needs to stay as real property with the building. They assign costs, and then that's how they determine the deductions that can come forward. As a part of that, we also provide any tax forms you need. So if there is a form that you need to file along with your tax return, you'll get a report and the form together, and then you get to hand that to your accountant so that they can account for that in your next return.
Nice.
Yeah.
What is your professional title?
I have a big title. I'm principal of our business development and technical services group. So what that means in layman's term is I help with a lot of the relationships up front and a lot of the selling up front. But I also have so much background in actually executing some of these very niche tax incentives that I act as almost like the technical expert who can come on the line and help answer more of the detailed questions about some of these incentives. So I kind of have dual roles in that I'm a typical relationship business development type folk, but I have a lot of experience where I can actually lean on that and share.
Yeah, nice.
Yeah.
Did I see somewhere that you're an engineer?
I am. Yeah.
How is that important to this process?
So the incentives that we specialize in, cost segregation obviously being a big one, but there's some real estate incentives that are related to energy efficiency as well. They're really nuanced in the tax code, and they have very engineering heavy aspects to them. So like cost segregation, for example, if you have a new construction project and trying to determine what parts of the building should be segregated, you need to be able to read blueprints. You need to understand more about building sciences to really understand what's critical to the structure of the building versus what could be considered real property. So having that background is really helpful. Also, they recommend, and the IRS recommends an engineer do the study. In some cases, there's another program called 17ID for energy efficient real estate. That requires a professional engineer certify it. So it's very clear that someone with an engineering background needs to be involved.
If someone was worried about a cost segregation study triggering an IRS audit,
Yeah.
is that a legit concern?
It's a question we get a lot, certainly. I wouldn't say it's a concern, really. We don't often see that using a cost segregation study in your return isn't going to be a trigger for audit. So audit percentages across our clients are equal to if you hadn't done it, right? We don't see some big uptick. But what is important, right, for anything you do when it comes to taxes is making sure whatever you do claim, you've got the substantiation behind that to answer any questions if they ever do arise. So if you take like a regular example of if you go to Goodwill and donate and you take a deduction for that, usually keep your receipts for that, or you make a list of the things you donated so you can substantiate the amount you claimed. It's the same idea. You want a good report that shows the methods that were used. You want to show that you use the steps that they recommend to calculate and perform a cost segregation study. And so that's what we provide. We provide a very defensible product. The nice thing too is though at Capstan we also provide audit defense. So if somebody were ever to actually get audited, we'll come in and help answer the questions.
Oh, very nice.
Yeah, it's actually one of the key components to our services. We always want to make sure that folks feel taken care of, and so we will come in and be able to help them with that.
Okay, perfect.
Yeah.
How should buyers think about tax strategy as they're evaluating properties?
I think it's critical that buyers think about tax strategy. Cost segregation has been around for, maybe since the 70s, earlier. It's been around for a really long time. So it's a normal strategy for buyers, and acquisition triggers cost segregation. So you can do a cost segregation as soon as you buy one. Knowing that that's a tool in your tool belt and that there will be a large deduction on the backside can be an incredible strategy for a business, but also for just a personal return, somebody who's trying to maybe build assets. So I think knowing that that's coming down the line, understanding the value that could be triggered as you're buying assets is really important so that you can utilize that, especially if you want to grow your portfolio quickly. Having that money come back and knowing what will come back will help you be able to plan for your future assets as well.
Nice.
Yeah.
What is a good referral source for you?
Meaning who's referring to us? Well, we work with a lot of CPA firms. So the CPA groups, very large firms often have cost segregation groups in-house, but some of your medium to smaller sized firms, they don't have. So they're a really good referral source because we provide the services that they can't offer. but really anybody who's in the real estate market and the transaction market. So brokers, agents, all sorts of folks who know when assets are being bought and sold are great because we can come in and help in a lot of ways, right? So like a broker who's trying to get an asset out there, knowing that the cost segregation is available and knowing the value can help move conversations along for any of those buyers that didn't realize that that was something that they can use as a tax strategy.
How does energy efficiency tie into tax strategy?
I'm so glad you asked. Energy efficiency incentives are like my wheelhouse. That's what I have done the longest in the tax space. So there's a couple of incentives. You focus primarily on commercial buildings, correct?
Correct.
So the 179D program is called the Energy Efficient Commercial Buildings Deduction. It triggers anytime you install new HVAC, new lighting, or new building envelope. And the more energy efficient it is, the higher deduction you can receive. So being able to factor in energy efficiency in your buildings is really key. If you buy one that needs improvements, knowing when to plan those improvements so you'll trigger those deductions can be a great strategy. And cost segregation and the 179D programs actually work really nicely together. So you can stack those incentives together to really maximize the deductions that come on the backside. And it gives you an extra incentive to make those improvements on a property or consider a property that's not in perfect condition. Maybe it fits your budget, but the HVAC is old. Knowing that you can claim that deduction and replace that equipment is important.
Wow, that's great.
Yeah.
What's a fact about tax strategy that most people don't know or most people might find surprising?
I think a lot of people don't realize that these incentives are there, and there's a few reasons. Like the 179D program, the energy efficiency program, it requires a professional engineer to certify, and we build an energy model. So it's truly like an engineering study. CPAs can't offer that as a service, so they're not necessarily telling their clients about it, and they may not know very much about it to tell their clients. So although we trust our CPAs and we should trust our CPAs, they know so much and they are very skilled people, there's still areas where they just aren't getting the information to know that, wow, I could have gotten a ton of benefit if I would have taken a look at my CapEx projects that I executed after I bought the building. So I think that's really important, right? Like people don't know that there's these programs that are available to them that could actually trigger a lot of money.
That's huge.
Especially in real estate. Yeah. I think the second thing I would say is that a lot of people assume if they claim one of them, they can't claim the others. And even though they're all federal programs, oftentimes you can stack up several federal programs. And you compare the utility rebates, you compare up any state programs or local programs, and now all of a sudden you have this huge stack of incentives that can fund a project if you're going to do like renovations especially. So those two things are where I see people, their lights turn on, right? They're like, wow, I had no idea I could do all of this. I didn't know it could stack up to this much value.
Yeah, that's huge. Mm-hmm. If someone remembers anything about this conversation, what would you like that to be?
If you're purchasing a building, if you're purchasing, newly constructing, or renovating a building, you should be asking about tax incentives. I think that's the most important thing. Ask your CPA. If they don't know it, they'll probably have a resource they can point you to get you more information. Don't leave those on the table. Like there's just too much benefit there. Why leave your money with the government and have them slowly give it to you when you can actually claim it all up front?